Now, I'm sure there's lots of exceptions to the rule, but today we're having a look at the question, should you invest in a company at its IPO? I'm having a look through a little list of companies here over the last sort of year, 18 months or so that I know have come onto the stock market, and just generally have a look through their performance. So the first one here is Oatly. Nice fast rise, and then it's sort of slumped from there. I think really what is happening are these companies sort of reaching their fundamental values, and once the excitement of the IPO has passed. So obviously initially you get a nice big run up, and then things just sort of tend to go a bit south. So that one's Oatly. Now the next one, this is Mex. This is Tortilla Mexican Grill. It's a small expanding UK restaurant chain, which I've got an interest in. I haven't invested in, but it's on my watch list, I'll put it that way. IPO nice and high, and it sort of slumped right down. Had a bit of bad news over its finances and what they were doing, and that has dropped even further. Another one. This is Deliveroo. Again, nice decent run up in the first few months, and then things have just sort of slid from there. It's getting a bit of a familiar pattern, this one, isn't it? This one I think has probably been around just that little bit longer, from July 19. But there you go, big run down, and then it's sort of up and finding its own sort of level. But the initial story is little up, drop, and away we go. One I have got funds in at the present time is ChargePoint. Massive rise up from its. This was a SPAC IPO, and absolutely soared really high during its build up and launch, and then has sort of really sunk right back down from there. I think long term, I think it's going to be a very viable one as the expansion of mobile, or the charging points out there for the electric vehicles, expands dramatically. Rivian. This one at initial IPO soared up really high, and it became they put the value of Amazon shares and Ford, who actually have invested into to Rivian as companies, shares up very high as well in that very short period, and from then it's just been a slow decline there. So we had a high peak at $170, and we're down there at around the $16 mark today. So and that's in that's December 2021, so just over a year. And if anyone has bought shares in the initial IPO, they're sitting at a big minus at the present time. I'm going to look up this one, because this is another reason why sometimes companies come to the stock market. And it's done a similar thing here, isn't it? So we've had a bit of interest in Airbnb, because people think, oh yeah, it's probably a very profitable business. And this one may be a case where there were comments I was hearing, other parties saying that it's a sort of business where the directors and the major shareholders behind the company before the IPO were actually looking to offload the company, and that can be another reason for coming to the stock market. And surprise, it's then hitting lower and lower values, because fundamentally it's a website business and nothing more than that. There's no great assets behind it, and its revenue stream at certain times of the year is a little bit, well, not that great. So there obviously are going to be exceptions to this. There are companies that start well and just keep going well, but it does seem to be a familiar trend. There could be a good point in just sitting back and waiting on some of these launches. If you're into short-term trading, then yes, you can take advantages of that nice big spike up in the early sessions on the stock launch. But obviously, bearing in mind, it might be then time to get out and sit and wait to come back in when we're hitting lower pricing again. So I look forward to seeing your comments in the comment section below. If you can pick out some companies that have taken off from day one and soared to the moon, fantastic. Like to hear about those as well. So, and hear your thoughts generally on investing in the early days of a company coming to the stock market. Today's video is sponsored by Rule Number 1 by Phil Town. It's a lovely, easy read and one of the first books I read getting involved in investing, and shows some lovely, easy ways to calculate the true value of a business and work out what sort of price you'd be looking at to buy a business when it's on sale is the ideal time. So you can click on the Amazon link in the description below, and for $8.99 you can get some great, easy reading as a good way to get started in investing. And clicking on the link also helps support the channel, of course. So if you like the videos, do like, comment and subscribe, and we'll catch up with you again soon.